How's it going today? Today we're going to talk about the big tech sell-off and all this. I made another video. I can make another video. I like to keep updated. Make sure you like and subscribe. I pick stocks. Have another one coming out. But anyway, it's May the 4th. May the 4th be with you. Big Star Wars fan and everything. I was thought about making a whole video of Star Wars, but I won't because I pick stocks. I don't talk Star Wars, but I do like it and everything like that. Hope everybody's having a great Star Wars day, you know. And anyway, maybe leave a comment on your favorite Star Wars movie or something. But anyway, I started to geek out on a stock video. But anyway, on a serious topic too, actually the NASDAQ is down a couple, 2 or 3 percentage points, and everybody's losing money today. But anyway, I'm like, kick it out. But anyway, on the different note, you know, I mean, the stocks are down quite a bit on the news that interest rates are going to go up. Or they're going to go up sooner than I thought, or sooner than everybody else thought, or whatever. But anyway, this video, I'm going to talk about that, what to do, and I get a lot of questions like, should I buy now? Should I do this? Should I do this? Should I do that? First of all, I hate answering those questions because it's all situational. Now, I'm going to give you some advice how to deal with sell-offs and stuff like that, how to not get so emotional, how to kind of, in a way, disconnect yourself from the markets. I think a lot of people just need to disconnect themselves from it. And the ways to do that is pretty simple. First, don't put all your money in stocks. That is really, really the best way to do it. You know what I mean? Is to have an emergency fund. To have maybe, I don't know, 6, 7 months, maybe a year of expenses just sitting in the bank. Maybe in a CD, or I don't really like CDs. Maybe in a money market account. You can talk to your bank. They go have all those things to do with it, or just in a savings account with saving rates are pretty low. But you know, I mean, something like that. You know, I mean, so that's the other way to kind of disconnect you. It's like when you lose, like especially if you have over $200,000, a 2% drop is a hell of a drop. I mean, I think today, I don't know the exact amount. I think I'm down 5-6%, which that's thousands of dollars in one day. You wake up at 9:30 and then you get all these notifications, which I turn notifications off anymore. I used to have them all the time on my thing, and then you see, blank trade desk is down 5, 6, Shopify's down 5, you know, I'm down 5 minutes. And then I'm like, well, I just lost thousands of dollars in a moment of seconds. And that's just the way it is, you know what I mean? So I've been doing it for years, so I'm used to these sell-offs. I mean, when you're in the market for as long as I am, you know, almost 8 years now, 9 years, it is what it happens. I mean, it does go down, and it does go down quite a bit. I mean, especially individual stocks, maybe not the whole over market. You say, well, you're down 2%, but if you have a stock or something, you might be down 10, 20. I've been down 20, and one day I was down last April. Was a big sell-off. It was down 12%. The average market, I was down almost about 10, 11, 13, 15% in one day. It just went, and it's just, you know, it's just the way it is. I mean, that's how the market is. I think people that got into last year around maybe April, I think a lot of people got in October, November, and everything like that. I think when Tesla got big or whatever, a lot of new investors got in the market, which is good. But now they're dealing with a sell-off, or they're dealing with, man, Tesla's down quite a bit. I bought it at this and that. And it's like, well, that's what happens. I mean, excuse me. But that's what happens. You know, the market doesn't go straight up. I mean, you look at the chart of the trade desk. You know, I could use that example because a lot of people know it. You can go back to 2018. Go look at 2018. In the fall of 2018, so October, that thing lost 50% of its value. I mean, it was almost 50%. It was up to like 150. Then it was down to like 80. It bottomed actually on Christmas Eve. You know, I mean, that was the big thing. And that's when I started making videos, because I was like, wait a minute, the market's kind of undervalued. You know, and that's when I make a lot of those videos. Like when I said 10 stocks for the next bull market, I made a bunch of these stock picks. You know, try to get out the bottom when nobody wants to get in. And I think we're going to have a big burst up in the stock market. I think stocks would just continue to sell off, but then eventually runs out of sellers. And God only knows when that could be. The trade desk might go down to $400 a share. And it was up at, hey, 800, you know what I mean? So that's losing 50%. I mean, that happens. It happens all the time. I think Appian or Appian or whatever it is, it's down over 50, 60%. I mean, it happens. I mean, this one happens on these high growth things. A lot of people, you know, I mean, they get in, they think it just keeps going up. It goes straight up. It doesn't go straight up. You know, this ain't an easy way to make money. This ain't a get rich quick scam. This ain't, well, buy today, go double tomorrow, you could sell it and it never goes down. If that's your expectations in the stock market, don't get in the stocks. Just sell them. Get out of it, because you're just going to lose sleep. You're going to lose more than just money. You know, I mean, you're going to lose your insanity if that's your expectation. So basically, lower expectations, how you kind of disconnect from it and know that it just doesn't go straight up. It doesn't. I mean, it's never have, and it never will. Now, I know I might be just kind of beating in the point, but you know, I mean, a lot of people always ask, you know, should I buy more or well this? Well, it depends. Like, that's why I always say diversify between 2 and 5% of your portfolio, and let it grow into larger positions. You know, let it work and earn its way into your portfolio. You know what I mean? You don't go all in on one stocks. At least have 20 stocks in your portfolio. I think that's a pretty good number. And that's what, you know, I kind of do. So that's why, and know the companies. That's the other thing. Know your companies that you're buying. You know, a lot of people, wow, I bought this thing, it's going up, I don't know what it does. Well, forget it, sell it. You might as well, because there's no point, you know. It's like when or people that trade stocks, well, I'm down 20%. Well, you should have thought of that before getting into it. You should already know the risk before you hit buy. You don't hit buy and then learn about the risk when you're down 20%. That doesn't, I mean, come on. I mean, that's just not thinking. I mean, you have to think, if this thing goes down, will it be okay? And that's what happens when people don't understand what they're buying. They're going buying because it went up. And we got spoiled. I think a lot of people got spoiled because 2020 was a great year for stocks. They just went up. That's all they did. At April all the way to December, they just went up. Every single stock. You could throw stocks at, you bought any stocks at the bottom of March, you made money. I mean, it's just that simple. And does that make sense? I mean, is every single company better off than it was then? Well, maybe. Some, maybe. But some, probably not. They're probably worse off. And so so basically, have money in your emergency fund. You know, that's the main thing. Don't put all your money in stocks. Diversify, you know, and then diversify your portfolio. So you diversify your money, diversify your portfolio, and then you have to know what you're buying. So don't buy something that you have no idea, because when it drops 20, 30%, you won't know what to do. You could just sit there and be like, well, damn, you know, you won't sit back or think like me when Trade Desk is down. I'm like, you know what? Advertisement business is going to boom. I mean, we already heard reports from Google, Facebook. I mean, they're doing great. They're doing great. So why would you sell the Trade Desk? I mean, it might drop a little bit. It might drop a little bit more. But that's really just time in the market. And that's just a strategy that just doesn't really work. You're gambling. At that point, you're gambling. You're not investing. You don't really, you're basing all your stuff on luck, and maybe you're lucky. I'm not, so I have to use skill. You know what I mean? I don't have any luck on my side. I don't have anything, but I can use fundamentals and skills and understanding of the market to make money. That's the only way that I know how to do it. Maybe you're good at getting lucky. I don't know. I'm not very lucky, so I can't really do that. But anyway, make sure you leave a comment, subscribe, and all that good stuff. And leave a like if this video helped you. I mean, I'm really not going to say, oh, this is the bottom. This is when it's going to stop. Normally, these sell-offs normally last 6-7 months. So if it started in February, maybe in the fall, it might recover. I know that is kind of a broad thing, but normally it takes about 6 months to fully recover unless something rescues it, but I doubt it. But I know in 2018, it sold off for about 3 or 4 months. And in January, I think of 2016, it sold off quite a bit. And some of these stocks, they take about 6 months. So, I mean, you might be August, November, October-ish when it recovers. And I think it might even be longer than that. So, I mean, it's not going to just one day it just pop. But maybe it's going to be a flat year, which was one of my bold predictions with growth. I said it couldn't really go any higher. It has to correct. And the two ways it corrects is with time or evaluations. But anyway, that's all I got to say. Thank you for watching, and thank you.